we go. Three, two.
Attention veterans! Attention veterans! By popular demand, you wanted me to do, when are you going to do a VA video? When are you going to talk about buying VA? Of course, you asked, so you shall receive. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. And tonight we are going to go over how to use your VA loan to buy a home in 2022. If it's your first time tuning in, do me a huge favor, hit the notification or subscribe button so you're notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 9 p.m. and Tuesday night on Instagram. And we post daily tips on TikTok and Instagram. So don't forget to follow us on all our other platforms. Guys, also, this is an interactive channel, so please ask a lot of questions. If you know anyone who's a veteran, tag them on this video. Save this video for them. Copy the link and send it to them. This is very important information, especially those who you know that have VA benefits. They haven't used it, or they're discouraged, like, hey, I don't want to do it. I can't do this. I can't do that. Or, hey, I'm saving until I can do the VA hack. Tonight, we're going to explain and break down how to do the VA hack appropriately so you can build your real estate empire. Yes, it's easy to do with a VA loan, and we're going to show you that tonight. All right, guys? So, how to buy with a VA mortgage in 2022. So, if you have VA benefits, you can check your certificate of eligibility. If you don't know how to do that, go ahead and reach out to your lender. They'll need your DD-214. You can reach out to your lender, give them a copy of your DD-214, and they could pull up your VA eligibility. If you are eligible, this is why people use VA loans. The reasons why people go with VA: 100% financing. People ask me all the time, Min, what are the pros and cons about buying VA? There's not too many cons. There's mostly pros, okay? 100% financing. Outside of down payment assistant loans, which there's so many different down payment assistant loans, I would still rather go VA if I had the opportunity. Because when you do down payment assistance, you're either borrowing the money, getting it as a grant, but if you get it as a grant, they're going to give you a higher rate anyways. Or you got to split some of your equity. So VA loans, except for maybe NACA, but then qualifying for NACA is a little bit harder. The VA loan, pound for pound, 100% financing. On top of that 100% financing, there's no monthly PMI. So when you put less than 20% down to buy a house, and you're going with a conventional loan, lenders want you to get PMI to protect themselves in case you can't make your mortgage payment. On FHA, it doesn't matter how much you put down, it is for sure you're getting monthly PMI. There's upfront and there's monthly. With VA, there is no monthly PMI. You're doing 100% financing, low interest rates, flexible credit, and flexible debt to income ratio. Also, the VA house hack. A lot of people go VA for the VA house hack. Also, the new thing, in 2020, there is no VA loan limit. As long as a lender is willing to lend you the money, there is no limit for your first VA loan. You have full entitlement. You can go beyond your entitlement. Of course, if you use it again, different story. But if you're buying your first VA home, home with a VA loan, there is no loan limit. So these are the main reasons why people go VA. Gives you a lot of, what's up, Bubba?
Sean,
Yes.
when there's only a little bit of envelopes and there's a lot of money, and if there's a lot of money, then
We'll deal with it tomorrow, okay, Daddy? What? All right, cool. All right, we're back, guys. Sorry about that. My son asked me a question. So, VA, these are the, sorry about that, guys. So, with VA loans, a lot of flexibility gives you a lot of buying power. So, I see a lot of pros, not a lot of cons. So, if you want to understand how to qualify for a VA loan or any loan program, the first step, download our Ultimate Mortgage Guide. Go to whatsamortgage.com, download our Ultimate Mortgage Guide. Also, go to our YouTube channel and go watch our playlist. Our guide and our playlist will allow you to qualify for any program in the United States. It doesn't matter the loan program. If you understand the foundation, thank you so much, Enzo. if you understand, if you understand how to qualify, you can qualify for any program. You just need the foundation. So if you go VA, conventional, FHA, jumbo, Doesn't matter the loan program. As long as you download our guide and watch our playlist, you'll be able to maneuver through any program. So that's the first step about buying VA. You got to download our guide and you got to watch our playlist. Step number 2, just like all the other programs, you want to solidify your income. Okay? Wage earner, you want to get the last pay stub of 2021 and your new pay stub. They want to break down your overtime or bonus. If you're buying with a VA loan, doesn't matter when you buy. If the lender uses overtime or bonus or commission to qualify you, you want to make sure you have that last pay stub. It makes the qualifications a lot easier. You're self-employed, you want to make sure your lender looks at your tax returns. Don't deduct everything yet, because if you deduct everything, you filed it, now you can't work backwards. You might not qualify. You might have to wait another year. So solidifying that income for 2021 is very important. Of course, if you have any non-taxable fixed income with a VA loan, you can gross it up 25%. So let's say you're collecting 25% in $2,500 a month in disability. Add 25% to it, which is $625. That means your gross income is $3,125. It's important for you to know that when you're trying to qualify with a VA mortgage. Also with VA mortgage, you can also use other income. As a veteran, there's other incomes you have to qualify. Like I said, you have your disability, which you can gross up. You have your base amount for housing, base amount of assistance. Don't forget, if you are in the military, you can use that as income to qualify to buy a home. But you cannot use the GI Bill as income. Okay? The reason why I want you to know all this income, because there's something called debt to income ratio and the residual test, which we'll talk about in a second. That's why you want all this information. If you're buying with a VA loan, if you're buying using a VA mortgage, you want to have all your W-2, your self-employed tax returns. You want to have your reward letters. You want to have your disability, your base amount of housing, base amount of assistance in front of you so your lender can see where you qualify. Don't just tell them this is how much I have. Have the letters. Have the letters. It makes it easier for the lender. If you want certainty in the biggest investment you're going to make in your life, you want to have your paperwork. All right? And like I said, GI Bill, you cannot use a GI Bill. So once you have all that information, you've solidified your income. The next step is you got to run credit. With VA, just like any other program, there is credit. Yes, they say you can go down to 500. There are lenders going from 500 to 580, but there's not that many. And technically, you'll probably have to go with a manual underwrite. Not a lot in a seller's market. Not a lot of sellers are accepting manual underwrites. You can still qualify. I'm not saying that you can't, but the problem is not a lot of sellers want to take a manual underwrite. They don't want to take that risk. In a buyer's market, all day long. So of course we put in information for people to qualify, for the majority of the masses to qualify. So if you want to qualify in this market, you can still qualify manual, but will the sellers take your offer? I don't know. But of course, if you can get an automated underwriting, of course you have a higher chance to getting your offer accepted. So they're gonna have to run credit. When they run your credit, just like every other program, you're gonna check the balance of the monthly payments, any court order debt, government order debt, child support, alimony. Okay, if you owe the money to IRS and that's not on your credit report, they're gonna pull it from your pay stubs. If they find it, they're gonna add it to your debt to income ratio. It's important for the residual income test. Okay. Once you tally up your debts, you want to break it apart, just like all the other programs for VA loans. You might need to eliminate debt to get your debt to income ratio lower. And it's crazy with VA, the DTI is a lot different than with FHA or conventional or USDA or jumbo. Remember, do not include your rent because you're going to probably not renting anymore when you buy your house. Also, don't include your insurance, utility bills. You're going to include the utility bills on your residual income test. Don't include your cell phone bill. Okay, so once you validate the credit, remember, VA also has their own public records. Chapter 7, 11, 13, short sales and foreclosures, see their 2-year pluses. FHA is 3 years. So you get a 1-year break with a VA mortgage. So 100% financing, no PMI, a lot more flexible than FHA when it comes to short sale or foreclosure, 2-year plus instead of the full 3 years. And with VA, just like FHA, they have rules you got to follow. Okay, here are the rules of debts. Let's say once you validate your credit, there are debts on there. If you have student loans, most people who are veterans don't have student loans because of the GI Bill. But if you do have student loans, whatever the payment is on your credit report, they add that to the monthly DTI, unless you are in deferment or forbearance. if you're in deferment or forbearance on a student loan and you are going VA, you have to have proof that it's in deferment for forbearance for more than a year and you could omit the payment. If you can't get that letter, it's the balance times it by 5% divided by 12. With VA, they do student loans a little bit differently than FHA and conventional. So for example, if you have a student loan of $30,000, they times it by 5%, which is $1,500. They divide it by 12, $125 a month. So that payment is added to your debt to income ratio. Installment debts, they treat it just like FHA, less than 10 payments left, and the payment must be less than 5% of your gross income. If you have any tax liens, you got to show 3 month payments, and it's added to your DTI. If you co-sign, you got to be the co, you can't be the main. So when you're validating your credit, you're going to tally up your monthly balances. When you run into student loans, that's how you calculate. Installment debt, less than 10 months old, left. Okay, tax liens and cosigns. So make sure you validate all this information before you go ahead and get excited. A lot of lenders, the newer guys and girls, might not know all these rules, and the automated system doesn't pick all this up. So you want to make sure, if you're going to talk to a lender, hey, bring this up to him. Hey, I got this worksheet from this guy from What's a Mortgage, and he says this. If you have issues, DM us here, okay? So we can talk you through it so you can get qualified. I respect and I'm very thankful for all the men and women that served our country. And if there's anything I can do to help you guys out, let me know. So always message us, right? And I will go ahead and help you guys out. So once you downloaded the guide, you verify the income, you verify the credit, the next step, the budget, okay? With VA, there is a budget. You're going to take the 2-year average of your monthly gross income or of your self-employed income, multiplied by 45%. Okay, so here's the difference. I like 45% with VA. You can go, I've seen them go to 70% debt to income ratio because there's another test you got to pass called the residual income test. But I never like to see anyone live on top ramen. Unless, of course, you're buying a home with a VA mortgage. Let's say because of VA, you can't add co-signers unless it's your spouse or another veteran that has eligibility. Let's say you have someone that can help you with the payment. Because they're helping you, but you can't use their income, your DTI might be too high. But with VA, you never know. It's like the luck of draw when it comes to DTI. But if you're the only one buying by yourself, I wouldn't go past the 40% debt to income ratio. So you take the monthly gross income, you times it by 45%, and you subtract your monthly obligation. So showing an example here, 10 grand times 45% is $4,500. Let's say you have $1,500 in credit cards, student loans, whatever payments you have. So that max is $3,000. You want to keep your payment under $3,000. But remember, with a VA loan, you don't have monthly PMI. So you qualify for more home than an FHA or conventional person. 100% financing, no monthly PMI. It's a great deal, okay? For those of you who want to be more conservative and those of you who want to be aggressive, here is our DTI cheat sheet. Check it out, okay? So if you make 120 grand a year or 140 grand a year, we times and that's we broke it down monthly for you. We times it by 40%, 43, 45 for those who want to be more conservative, 40, 43%. But those of you who want to be aggressive, or you have people who are going to help you with the mortgage payment, but they just can't go on the loan, I would push it at 50, 55%. That's the max you can afford without debt, and then you can subtract debt from that. Okay. So remember, if you want to include the debt or not include it, that's the DTI you can go up to, is your max with your income. So once you did the DTI test, so remember, VA is a little quirky. There's the debt to income ratio test, and then there's the residual income test. So if you live in the United States, of course, it's broken down to 4 regions. You got Northeast, Midwest, South, and the West. Okay, you can go on the VA website and find out what state falls under what category. Let's say you're a family member of 1. That means just you. After you pay all your bills and the loan amount is over 80 grand, you need to have X amount left over to live. If you don't, you can't get a VA loan. Let's say you're a family member of 4, you're in California. Once you cover your mortgage and other debts, bills, and we'll go over that in a second, you got to have $1,117 left. 5 people, $1,158 left. If you're in the South, Midwest, and depending on your state, this is the popular residual income test, okay? Make sure you Google it, and you can pull it off the VA website. And here's just an example for you, okay? So what debts do they calculate? Here we go. So if you pass the DTI test, you get that DU approved, you still got to pass this residual. If you don't pass the DTI one, you might have to go with the manual underwriting. They'll just do the residual. Okay, let's say you don't pass a DTI, but you pass a residual. Depending on the lender and their overlays, they might do it with just a residual income test for the manual. But like I said, in a seller's market, not a lot of sellers are accepting manual underwriting. Here's how the residual income test works. Okay, you got your eligible income, your W-2, your self-employed. Remember, you can add your Social Security income, your BA, right? I call it your BA. Remember that we talked about in our other slides. Oh, let me go. Lego. Let's see, 1 second here. Just we go over it one more time. You can use your don't forget your regular income, your disability income, your BA, your base amount of housing, your BAS, your base amount of assistance, and not the GI Bill. So you would have calculated all your income together. If there's 2 people on the loan, your husband, your spouse, or if another veteran buying with you, you group it all together. Okay. So once you group the income together, why is the mouse all tripping? Okay, sorry. Once you get it all together, you subtract the complete mortgage payment. So that's principal, interest, tax, insurance. If you buy a home that has HOA, you would include the HOA. If you buy in an area where there's a flood insurance, you have to include that, minus your credit card debts. So when you run credit, like I said, in I think step number 3, when you verify your credit, you add all your credit debts in there. If you run credit and there's a monthly payment, you put it right there. And then when you look on your pay stub, you want to subtract your monthly federal tax withholding, your state tax withholding, your Social Security, and your FICA. The reason why it's broken down like that, because you don't include your other benefits, like your 401k, if you have a 401k, or if you get any other benefits. Okay, then it's 14 cents times the square footage of the home. Let's say this home is 2,000 square foot. That's $280 a month. So if you made 10 grand a month and your mortgage payment was $2,500 and those were your bills, that total would be $2,520. Okay, left over you would have $2,520. So if you have $2,520, of course, if you look at our other slide, you would pass. Let go.
Take it.
Let go of the. You would pass the residual income test. Talk to your lender. They definitely will do that for you. But if you want to do it yourself, here is the formula. You will find it in our Ultimate Mortgage Guide. And if you don't have it, please message me. We'll break it down for you, okay? A residual income test. So there's 2 income tests you got to pass when you are buying with a VA loan. And if you decide you want to come in with a down payment, you can go ahead and do so. Of course, if you use up your entitlement or partial entitlement, you're going to have to come out of pocket. And here we show some of the down payment because with VA, they'll cover up to 25%, right? So if you do the residual income, the entitlement, and you don't have enough entitlement, you're gonna have to come out of pocket. Hopefully that helps you out there. I gotta go to the next slide. So with VA, you can draw from your retirement, get money as a gift, sourcing just like FHA and conventional. This is if you're gonna cover your own closing costs. If you cover your own closing costs. Yes, some veterans, I'm not saying all, they're used as straw buyers to use their benefits. I'm not saying that that's wrong, of course. So that's why they want to make sure, even with veterans, they're not straw buyers. So they want to make sure if you're drawn from your retirement or getting a gift, that you are the actual buyer and not a straw buyer. Okay? Once you get it all together, you put it all together, okay? And then once you put it all together, you want to find out what your payment is. Once you figure out your payment, of course, with just like all loan programs, you got to rebalance. If you're not happy with your payment, you can either drop the purchase price, bring in a bigger down payment, pay off some debt, or add a cosigner. Remember, your cosigner could only be your spouse or a veteran with eligible benefits. Other things you want to know about VA loans. Remember, you can waive the funding fee if you have 10% disability or more. 10% disability or more, you can waive the funding fee, or you have a Purple Heart. And remember, if you are buying a 2-unit, 3-unit, or 4-unit with a VA loan, you can only use the rental income to help you qualify if you're using a property management company, unless you have past landlord experience, which not most veterans have. you're going to have to use a property management company. You want to set that up ahead of time so you're able to use rental income to help you qualify. You can use up to 75% of the rental income to help you qualify. I call it refreshing, but you can refresh your entitlement or restore your entitlement with VA loans. You can use it as many times as you want. You can restore your entitlement. Can you have more than one VA loan? Yes. But if you're trying to use VA loan twice and use 100% financing, there is a slim chance you can. But if you go with the VA loan and you go past your entitlement on your first loan, let's say there is no loan limit. But if you go past there is a loan limit, but there's not. If you go past your entitlement, you can still get a VA loan, or per that county, you go past that entitlement, you can still get your VA loan 100% financing. But whatever you go over, if you try to buy VA on your next loan, it does affect how much you can qualify for 100% financing. Definitely, you want to talk to a lender. There's a worksheet they all have. The formula is complicating. It's like there's two formulas. They take the lesser of two. Definitely, if you have a VA loan or you're thinking about house hacking and not trying to take your VA loan and restore it, talk to a lender, okay? Also, with a VA loan, only your spouse or another veteran who has benefits can help you co-sign. So if your best friend's a veteran, or your child, or your parent, or your sibling, you cannot co-sign with them and they cannot co-sign with you if you are the veteran. Only your spouse and another veteran with benefits. Also, another thing for all you veterans, if you buy a home in a community state property like Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Washington, or Wisconsin, you got to run the spouse's credit. You got to add their monthly debts to your qualifications. Even if they don't qualify for the mortgage, let's say they don't have the credit, you still got to add their debts in those states. If you're not in that state, depending on the lender, it might have an overlay. But if the lender is selling the Ginnie Mae directly, they will not run the spouse's credit. Only in community states. Okay, so those are things you need to know about VA. And if you have questions, leave a comment if you have any questions, and let's get into our Q&A. All right, guys. Hopefully that helps you out. That answers a lot of questions that you guys have. Oh, before I get into Q&A, there is something called a VA renovation loan. Okay? Actually, I have two things first. My bad. VA renovation loans. So with a VA renovation loan, you can borrow up to 110% of the new appraised value, 100% financing. So you're a veteran, you're buying a house, you can buy a house, convert it into a 4-unit. You can buy a house and do a full renovation like it's a new construction in a regular neighborhood and not pay the Melrose and HOA. If you have a disability, you can use the renovation to build out the home so it works for you, okay? So VA renovation, very popular. More popular than FHA and conventional because it's 100% financing, 110% of the new appraised value. Remember that. That means nothing out of pocket, not even the appraisal. They can't even charge you an appraisal up front. So VA, if you are a veteran or you have VA benefits, but someone tells you what's the con? All right, this is too good to be true. You served our country. It's not too good to be true. You deserve it. All right. So VA renovations, awesome program. If you go with a 4-plex, 3-unit, or 2-unit, right? You do a VA renovation. You do units. You can have the rental income on the units to help you qualify. You still got to qualify even though you do renovation. But if you just build an ADU, you cannot use border rent. It has to be a straight up duplex, triplex, or 4-plex. And here we go. For all the veterans out there, the VA house hack. 4, 3, 2, 1. If you know anyone who's a veteran and they haven't used their benefits, this is what they got to do if they want to use their benefit. Step 1, you can buy a 4-unit with your VA mortgage. Or buy a single-family home, duplex, triplex. You can convert it to a 4-unit if you want. Once you convert it to a 4-unit, you can refinance it to an FHA or conventional loan. It's up to you. If you refinance it to an FHA loan, you will need 3.5% equity. And also, if you have a 4-unit or 3-unit, you got to pass a self-sufficient rule. That means 75% of the total rent must be more than the mortgage payment. So you have a VA loan. You bought VA. And of course, you want a house hack. And I'm telling you, trying to have 2 VA loans at the same time, it's not impossible. It's very hard. It's easier that you buy a VA, you wait 12 months. If you have enough equity, you can convert it to FHA. And then after a year from that, you can use your VA again, because when you convert to FHA or an owner-occupied loan, you do sign a piece of paper, an affidavit saying that you're going to live in the property for at least 12 months. Of course, it depends on how long you're willing to wait. Once you see 3.5% equity or more, you can convert it to an FHA loan or conventional loan. If you go conventional, it's a 4-unit. Even owner-occupied, you need at least 20 to 25% equity. So you would be chilling in the house till you have 20% equity and refinance it to a rate and term conventional owner-occupied. All right. If you do that, you still got to wait 1 more year unless you refinance at 25% equity as investment. So if you buy a home with the VA, you go with a 4-unit, refinance it conventional or FHA. Depending on the program, you have to have the minimal amount of equity. And with FHA, remember the self-sufficient rule. Once you do that, and it's all seasoned, you can step 2, buy a 3-unit. You can buy a 3-unit VA, rinse and repeat, same thing. 3.5% down equity, 3.5% equity. Remember the self-sufficient rule, or go conventional, 20 to 25%. So you decide how you want to weight it out. So step 1 and 2 for VA is the same if you want a house hack. But remember, you're going from 4-unit to 3-unit. Remember that. And then the next one, step 3. You want to go, where does it buy VA again? For 4-unit again. You want to buy a duplex. Sorry, I'm supposed to say buy a duplex with a VA loan. Refi that duplex into an FHA or conventional, 3.5%. There's no self-sufficient rule on the duplex. Or conventional, 15 to 25%. Then you rinse and repeat. You buy, for step 4, you buy a small home with a VA loan. Add an ADU if you want so you can collect rent. Do that renovation loan. Then you can refinance an FHA or conventional. Wait out another year. I think the process of doing this probably will take you a handful of years, but if you do it right and patiently, step 5, you end up with your big VA loan, your big house, right? Unless you want to sell one of the other properties. But then there's another formula if you do that. Then you can use your rents from your 4-unit, your 3-unit, your 2-unit, and your smaller home with an ADU to cover your big mortgage. Or now you have your 4 properties, and there starts your real estate portfolio. Now you have equity in these properties. You can sell, you can flip. You know, there's a lot you can do, but once you have homes that you can build equity on, and you can do this with 100% financing, just follow the steps correctly. The lender wants to always see that you're upgrading. Yeah, 4 units. Of course, each unit should be smaller than the 3-unit, and then 2-unit, and then smaller home, then bigger home. If you house hack that way, it is believable in the eyes of the underwriter. If you don't do it that way, you're going to run into hiccups. They're not going to believe you're buying owner-occupied VA. They just know that you're an investor. So make sure you follow these strategies. But the most important strategy to follow our page, right? Follow us on Facebook, YouTube, Instagram, TikTok, or LinkedIn. Definitely follow us for more tips. If you enjoy this content, do me a huge favor. Save this video, share this video, and like it. And if you have more questions regarding VA, go ahead and give us a call, 714-790-9697. You can call us. All the shy guys and shy girls out there, send us a text message. If you have a loan estimate that you want us to review, you want us to help you read it or beat it, send it over to info@whatsamortgage.com. All right? If you do that, we will help you review it, empower you, help you read it, and help you make the next decision for you and your family. All right, guys, let's get into some Q&A here. Okay. What's going on, Mikkel? What's going on, Concert Dude? My man just signed closing disclosure docs, creeping close to closing day. Congratulations, Concert Dude. What's going on, Lynn? You're welcome. Brenda, what's going on? Lynn, I'm already using my VA now. Congratulations, Lynn. So what else? Lynn, thank you so much. To you too. Happy New Year's. Oh, she knows. Why would banks or mortgage lenders not prefer or recommend VAs over the limit? I think, Mikkel, one of the reasons why a lot of sellers, I don't think banks don't recommend it. Sellers, a lot of times with VA loan, there has to be a termite report. If it's an older home and they know there's termite issues with VA, termite has to clear. And with VA's appraisals, of course, the appraisals are all on their own timeline. They cannot be rushed. I forgot the date. I think you cannot, let's say you go through the VA portal, you order the appraisal. They have 10 business days to get it in. A lot of times they're trying to get these contingencies released, so they don't like that. But I would tell people if I'm buying VA, hey, I'm using my VA benefits because in case the home doesn't appraise, I have money to come in with the difference. That's the reason why I'm going with the VA, because it maximizes my dollar. That's what I would say. Hi, Jolene. Thank you, man. You're teaching as well. Thank you. MJ, starting my home buying journey with 11K available on credit card. Used my credit cards total of $800. Since starting, can be disqualified for a VA loan. We also did receive increased income and credit increase. MJM, please message me. I don't understand what you're trying to say. You have 11K available on credit cards. So I don't know how that would disqualify you, because if you have a $11,000 limit with only $800 a month, there's got to be something to your credit. There's got to be either a late. What I would do is, you have a copy of your credit report, you can send it over to info@what's-a-mortgage, and we will go ahead and look at your credit, see why your FICO would drop. All right, go ahead to info@what's-a-mortgage, or send us a message at 714-790-9697. Thank you so much, Brenda. Brenda, can you use your VA loan twice? Yes. So if you have VA benefits, you have something called entitlement. You are entitled, okay? So if you use it, if there is something called an entitlement, right now, if you use your VA benefits, most lenders will let you go up to $2 million. Some lenders even more. It all depends on the lender. There's overlays. So of course, if there's a county loan limit and you went above the county loan limit, most likely you're going to use up a lot of your entitlement. So every county still has a loan limit. Of course, if you use your initial entitlement, they don't really care. Of course, if you use your initial entitlement and it's below the loan limit, you have a higher chance of using that entitlement again. But if you go over, there's a formula you figure it out. But you can have two, Brenda, but it's really hard. It depends on how much of your entitlement you've used up already. Definitely reach out to go through our worksheet, and we'll help you break you down to see if you can use your entitlement again. You can still buy VA, but doesn't mean you're going to get 100% financing. The entitlement will tell you how much you can use. Elisa, what is a straw buyer? A straw buyer is when, just like a scarecrow, straw buyer, right? You stuff it. So a straw buyer is like a straw, like just someone's profile, and an investor is using that buyer to buy a property. That's called a straw buyer, because they're not the real buyer. They're just a straw of it, right? So because a lot of investors, they want to come minimal out of pocket. Well, VA is 100% financing. Some investors will come to veteran. Hey, I know you have VA benefits. Use it to buy this house for me, and I'll give you X amount of money. It's still cheaper than going 20-25% down. That's what people were doing back in the days, and that's why a lot of foreclosures happen. So they want to prevent that. So if you're buying with VA and you have to come out of pocket for closing costs, they want to make sure you're not a straw buyer. Can you refinance under VA loan and take cash out more than once? Yes, Brenda, you can. Remember, with VA, you can go up to 100% of your VA loan, okay, of the property. I'm looking to buy in Florida. I will be relocated, and I am a veteran. So Fernando, if you use your VA benefit, so if you bought in Florida, find out what. Of course, we have to look up the loan limit, or the loan limit in Florida, if you went over the entitlement or not, depending on the number. Then we look on the state you buy now and how much entitlement you have left. Definitely reach out so we can go through the worksheet with you, so we can see how much you qualify for in when you relocate, depending on the state as well. Give us a call, 714-790-9697. Okay? Thank you so much, Angie. Any banks can do VA loan. What about PMI? If you go VA, there is no PMI. Sing Sing. Thank you so much, Angie. Hi, man. I'm in underwriting for FHA loan, and I made a $5,000 cash deposit. I was informed I can't use that for closing. Why is that? The reason why, it's non-sourceable money. They're the manual, we said earlier about straw buyers. If you deposit $5,000, it's not sourceable money. They don't know if you're a straw buyer or not. So you cannot use that money towards your closing costs or down payment. You can get a gift from a family member, but you can't use that money. If you already deposited, they got to back it out. So if you're short to close now, you can either, there's room, you might be able to increase the rate to cover closing costs or get a gift from a family member. Hopefully that helps you out. Can my father use his VA to help me buy, then refi after 12 months to FHA or conventional in California? Elisa, your dad would have to buy and live in the house and qualify without you for the home. Okay? You would not be able to go on the loan and it's like that whole reverse straw buyer. It's like that straw buyer thing we talked about. He would have to buy the home, move into it with you in 12 months. You can refinance it into your name if you want, but no, you would have to qualify. He would have to qualify without you or with your his spouse. All right. Hopefully that helps you out. All right, guys. Hopefully that was valuable information. If you guys enjoyed the content, do me a huge favor. Save this video, share this video, and like this video. And if you're not following us by now, please hit that subscribe or notification button. All right, guys. And don't forget, always give us a call, 714-790-9697. Or you can email us, info@whatsamortgage.com. How would a family member gift me the gift? Do they, Karen, how would a family member gift me the gift? Do they just deposit it or do they write a formative check or something? If it was me, Karen, I would have the gift member wire it directly to escrow. If they wire it to your account, now you're gonna have to track them wiring to your account and then you wiring into escrow. Have them send the money directly to escrow on your behalf. There's a gift letter they're gonna have to fill out and they'll be okay. If they're gonna gift over $16,000, that's perfectly fine. Remember, the lifetime gift tax exclusion allows you to gift in 2022 up to $12 million. Unless they're balling out of control, you're gonna be okay. All right. How factual is that cosigner comment, and how can we hack after buying duplex? So, how factual? Well, like I said, VA, you can use your spouse. You can look it up yourself if you don't believe me, Victor. All right, I'm not throwing shade. You can either use your spouse or another veteran who has VA benefits. You can look that up yourself. All right. House hack. You bought a duplex? Go out and buy a small single family home. Right. So if you have a duplex, convert it into a conventional loan. Once you refinance the conventional loan, then go ahead and go out and buy your small single family home and add an ADU to it. And then go ahead and buy your larger one. All right. Hopefully that helps you out. All right, guys. If you have more questions, Victor, go ahead and give us a call, 714-790-9697. All right, guys, we want to end all our episodes with our attitude is gratitude. Without you, there would be no us. So have a great night. And everyone out there, Happy New Year. Chúc mừng năm mới, gung ho